post Reg A plus liquidity, there's some interesting things here. One is that the SEC, from the SEC's perspective, as I said earlier, the Reg A plus investors are liquid. Pretty much everyone knows that. But everyone else is liquid too, guys. So the founders and old, long-term investors, everyone else is liquid unless you lock them up, which you may end up wanting to do. But that doesn't mean there's liquidity and it's easy for them to sell, but they're allowed to sell to anyone in the general public. It doesn't have to be a sophisticated investor, obviously, because Reg A Plus itself doesn't require that, right? So if these investors have exceeded, or shareholders, founders, have exceeded their Rule 144 holding period, then liquidity is really cool with the following constraints. The insiders and the investors that own more than 10% of the outstanding stock are limited by, they can only sell for 2 weeks after each time the company makes its management financial report or its audit report. So in a standard Reg A plus, that's annual audit, 6 monthly management financials. Okay, so they only have a short window, and in that window, they're only allowed to sell less than 1% of float per day. And guess what? If you're not listed anywhere, there isn't much float, right? So then we get into what I'll cover in a few minutes, the post-listing opportunities that exist. So, but be aware there's a hell of a lot of wonderful liquidity options here that, you may or may not want. You can control them, but they do exist in terms of a side effect of doing a Reg A plus. So I'm going to talk to the one that I find the most interesting, really. Of course, you can fashion direct liquidity to the investor in a Reg A plus. But that's not what I'm going to talk about. You can do that within reasonable constraints. And that makes it easier to raise the money because investors see that if they're pressed for cash, they'll probably be able to get some or all of their money back. But, and I can dwell on that. I can get back on that later if you guys would like me to. But what's happened, it's been ages coming, let's face it, Christ, the whole Reg A plus awareness thing is still this sort of best kept secret after 5 years and a quarter on out and about and being used. There are now these exchanges that are called ATSs, alternative trading systems, which are like broker dealers. And they are allowed to to establish markets for Reg A plus securities. And there are quite a few of them doing that, and they're happening now. I'm getting regular calls from, and actually emails from these guys asking me to brief me because they want, our companies to go list on their exchanges. I love this. I love this because these exchanges, they don't really solve the insider problem, right? I mean, the momentum isn't the volume isn't high enough to solve that issue, but the volume is, not the volume, excuse me. The point is that, let's say, the point is that you can list your shares very easily, inexpensively, and people can buy them and sell them, and there's no naked shorting, right? The big issue with being listed on the OTC markets or on the NASDAQ when you're a pre-revenue company and you only have sporadic news because you're waiting on the FDA clinical trials, this is a hell place to be. Unless it really is a hellish place to be, because guess what? You may know this, but I'm going to mention this because I didn't know this until the first batch of Reg A plus IPOs went out, and I was studying why they were getting hammered in the aftermarket. The truth is that stockbrokers are allowed to short newly listed, they can short any stock that's publicly traded without borrow. They don't have to get borrow. So any stock that's out there, and especially newly listed stock, is super vulnerable to being hammered. That is a big, big reason there's so many broken public companies. Of course, there are other reasons. I don't mean to defend the flaky companies that are out there, but my recommendation to you is rarely, please don't do a listing on one of the major exchanges or on the OTC markets unless You are thoroughly prepared with news announcements stacked up and a internal strategy to somehow condition the markets. But when the hell do you have that in a biotech company that's pre-revenue? Really difficult situation. So I look at these aftermarkets, and by the time any of you would be doing a Reg A Plus with us and ready to use them, I'll have solid recommendations. I have a preliminary favorite now, but it's too early because I haven't learned about the ones that have been reaching out to me that I haven't made time to talk with because we're getting so many neat companies approaching us. Anyway, so the point is that no naked shorting. It's simply people who are investors buying and selling. And during the Reg A Plus, you can list as long as you've got, typically more than 2,000 investors already, which means, you raise some money in your Reg A Plus. One of the ones that I like is a preliminary basis. They will require companies that use their system to do management financials monthly, right? That plus a modest listing fee plus 2,000 plus, more than 2,000 investors, which most Reg A Pluses get. And you can list even during the raise. And if you want to do it during the raise, then the marketing of the raise will support the price to the aftermarket. And afterwards, you want to market the company anyway. If you want to support the aftermarket, you could do every year a small Reg A Plus to promote and raise the share price if you chose to help provide better liquidity, or have selling insiders. Up to 30% of a Reg A Plus can be selling insiders anyway, right? I think you guys are aware of that.